Okay, think about your home for a second. For so many of us, it's more than just, well, where we live. It's probably our biggest asset, right? The foundation maybe for our financial future.
Absolutely. It represents years of saving, maybe improvements, a lot of memories, too.
Exactly. But what if selling that home after all those years building equity came with this kind of hidden tax surprise, something that could really, bite into your plans, maybe retirement or just buying the next
Yeah,
place?
that's what we're digging into today is the federal capital gains tax on home sales. And it might affect more people than you think.
So our mission today is really to unpack this. We want to look at where it came from, its history, how it's playing out for homeowners like you right now, and crucially, the big policy debates happening to maybe change it.
Right. You've probably heard phrases like stay put penalty or heard about the housing supply crisis. Well, this tax, it's tangled up in all of that. It's
Yeah.
surprisingly influential.
And hopefully by the end of this deep dive, you'll have a really solid grasp of the arguments, both for and against shaking things up. We want to help you cut through some of the noise.
Definitely. And we've pulled together insights from, well, all over. We've got a timeline, reports from Housing Wire, Newsweek, Smart Asset, some heavy-hitting research from the National Bureau of Economic Research, advocacy groups like the American Property Owners Alliance, plus official stuff from the IRS and Congress.
Okay, so let's start with the basics. This capital gains tax on selling your home. What exactly is it?
So fundamentally, it's a federal tax. It kicks in when you sell an asset. And yes, your main home counts for more than what the IRS calls its adjusted basis.
Adjusted basis.
Yeah.
And that's not just the purchase price, right?
No, exactly. It's generally what you paid, plus the cost of significant capital improvements you've made, think a new roof, a major addition, not just, painting. Then you might subtract certain depreciation if you ever claimed it, like for a home office. The tax is basically on the profit, the gain you made.
Got it. And that's key because I think a lot of people assume this stuff is just for, like, property investors or flippers, not their actual family home.
That's a common misconception, yeah.
So how did we get here? What did it look like before the current system?
The origin story. Well, before 1997, things were quite different. The IRS had this very specific exemption tied to age.
Okay.
If you were 55 or older, you could exclude up to $125,000 in profit from selling your main home. It was really designed, to help people out as they were nearing or entering retirement, give them some flexibility.
So pretty targeted. Then 1997 happens and there's a major shift.
Big time. Congress basically threw out that age rule and brought in a much broader universal exclusion. It became $250,000 for single folks and $500,000 for married couples filing jointly.
And the thinking back then, the stated goal was that this tax should really only hit the most affluent homeowners, wasn't it?
Precisely. And you have to put that into context. Think about 1997 home prices. The median price for a single-family home in the U.S. was, what, somewhere around $125,000, maybe $145,000.
Wow. Yeah. Worlds away from today.
Right. So those $250K and $500K exclusion amounts, they seemed enormous back then. They really were intended to cover almost everyone's gains, except maybe on, super high-end properties or places that had seen truly extraordinary appreciation.
Which leads us right into the problem today, why people are calling this an outdated burden. Because the central issue is those numbers, the $250K and $500, they haven't changed.
Not one bit. They were set in 1997 and hasn't been adjusted for inflation since. Meanwhile, as you said, home values
Which have gone through the roof.
Exactly. We saw median prices hitting, $402,600 in late 2024, and then climbing again to around $416,900 in early 2025. That gap between the fixed exclusion and actual home values just keeps getting wider.
And the inflation point is huge. If you just adjusted that original $250,000 single filer limit from 97 for inflation, you'd be looking at something like $496,000 in 2024 dollars.
It's a stark difference.
It really is.
Yeah.
And it means this tax, originally meant for the very wealthy, is now catching way more people, just, regular homeowners, not necessarily affluent ones.
The numbers bear that out pretty dramatically. Look at the share of U.S. home sellers making over $500,000 in profit. It was tiny back in 2003, like 1.3%.
Okay.
By 2019, it was up to 3%, still smallish. But then by 2023, it jumped to 8%. That's a significant chunk of sellers facing potential tax bills they never expected.
8%. That really drives it home. It's not some niche issue anymore. And we heard that story, didn't we, about the millennial homeowner in San Diego?
Yeah, this staunchly middle-class description really stood out.
Right. Bought her place 14 years ago, probably thought it was a smart move, building equity. Now she's looking at selling and potentially facing a $100,000 tax bill. Feels completely stuck.
And that story perfectly illustrates it's not just, a boomer problem or empty nesters. It's hitting younger generations, middle-class families trying to move up or relocate.
Which brings us to this idea of the stay-put penalty. Can you unpack that a bit more?
Sure. It's basically this effect where the capital gains tax, especially combined with today's high home prices and often higher mortgage rates if they were to buy again, acts as a major disincentive to sell. People look at the potential tax hit and think, maybe I'll just stay put.
It traps them financially.
It really can. Selma Hepp, she's the chief economist at CoreLogic, she put it well. She said homeowners are feeling locked in, particularly those for whom their home equity is really the only source of wealth savings.
That makes sense. It's not just numbers on paper, it's their nest egg.
Exactly. And we heard from David Levin, that 71-year-old in California. His fear was really palpable. Sell the house, pay the tax, and then what? Not enough left over to buy a comparable new home.
Gosh, yeah.
For seniors especially, this hits hard. Downsizing, moving closer to kids or grandkids, accessing that equity, which, let's face it, is often seen as a huge part of their retirement plan.
It's the cornerstone of their retirement strategy, I think was the phrase used. And something like 60% of homeowners see it that way.
Right. So this tax directly interferes with that life planning for a lot of people.
And the knock-on effect. It hammers the housing market overall.
Absolutely. Shannon McGann from the National Association of Realtors, NAR, she was pretty blunt. She said this policy is quietly distorting the housing market. How? By locking in older homeowners and basically strangling inventory just when America needs it most.
Strangling inventory, that's strong language.
It reflects the reality. NAR's own research suggests maybe 34% of homeowners, that's like 29 million Americans, could potentially exceed the individual $250K threshold if they sold. And maybe 10% or 8 million could exceed the joint $500K threshold.
Wow. That's a massive number of homes potentially being kept off the market because of this tax rule.
It's significant, yeah, which logically leads to talk about solutions.
Okay, so what's on the table?
Well, one very direct approach is a bill introduced by Congresswoman Marjorie Taylor Greene back on July 10th, 2025. It's called the No Tax on Home Sales Act.
And the name pretty much says it all.
Pretty much. It proposes to completely eliminate the federal capital gains tax on the sale of primary residences. Just get rid of it for your main home.
What are the stated goals behind that?
Congresswoman Greene laid out a few key objectives. She wants to deliver critical tax relief, obviously. Also, to encourage mobility, get rid of that stay-put penalty, which, in theory, helps increase housing supply. And fundamentally, to let people unlock that equity that's tied up in their homes.
Is there anything in there about, like, house flippers or investors? Because that's often a concern.
Yeah, that's an important point. The bill explicitly states it does not apply to home flippers or real estate investors. The aim seems to be protecting regular homeowners and first-time buyers, not creating a windfall for speculators.
Okay. And has this idea gotten much traction?
Well, it's certainly being discussed. Donald Trump has indicated he'd consider it, calling the idea a very big positive and a potential great incentive. And you hear from industry folks, too. Joel Berner, an economist at Realtor.com, acknowledged that getting rid of the tax could be a good thing for the market, mainly by freeing up some of that locked-in inventory.
So elimination is one route. Are there other ideas floating around, less drastic ones maybe?
Yes, definitely. Some experts, like accounting professor Osher Ratcliffe, suggest maybe not full elimination, but other fixes, like perhaps doubling the current exclusion amount, say $500K for singles, $1 million for couples.
Okay, that would certainly help bridge the gap with current prices.
Right. Or maybe even more fundamentally, just index the existing $250K, $500K amounts to inflation going forward. The argument there is that would simply restore the original intent from 1997, making sure the relief keeps pace with the economy and home values.
So align it with reality, basically.
That's the idea.
Now, of course, no big policy change happens in a vacuum. There must be counter-arguments, concerns about eliminating this tax.
Oh, absolutely. And it's important to hear those, too. A major criticism, often voiced by Democrats, is that completely eliminating the tax would disproportionately benefit the wealthiest homeowners.
How so?
Well, their gains are often far, far above the current $250K or $500K limits. So removing the tax entirely gives them a much bigger windfall than someone whose gain is just slightly over the limit. Research from the National Bureau of Economic Research often comes up here. They consistently find that most capital gains tax benefits already flow to the very top earners, like the top 0.5 to 2%.
Right.
And Joel Berner, the Realtor.com economist, kind of echoed that, saying elimination probably wouldn't move the needle for a regular family unless their house went up by like over $1 million. For most people, hitting the current limit, indexing or raising it might be more targeted relief.
That makes sense. What else? Any other big concerns?
Revenue is a big one. Getting rid of the tax entirely would mean a significant loss of federal revenue. That money funds public services. So that's a major consideration.
Okay. And what about the housing market itself? Could eliminating the tax have unintended consequences?
That's another worry.
Yeah.
Some critics fear that removing the tax might actually increase demand from investors. They worry investors might find ways, loopholes maybe, to make properties qualify as primary residences, just to flip them tax-free.
Which could push prices up, not down.
Potentially, yeah, making affordability even worse. Some people point to Canada, they don't have a capital gains tax on primary homes. And their housing crisis is, well, pretty severe. It's not a direct cause and effect, but it's raised as a cautionary tale.
Any other arguments against elimination?
Just the scale of the impact. Some argue that since, fewer than 10% of home sales actually trigger this tax right now, getting rid of it entirely won't do much at all for the vast majority of sellers or for really boosting overall supply in a meaningful way.
Okay, so it might not be the silver bullet for inventory. Some hope it is.
That's the counterpoint, yeah.
And while we're talking taxes and homes, it's probably worth just quickly mentioning a couple of other related things people might be feeling.
Good idea. Like the SALT deduction cap, right?
Exactly. The state and local tax deduction, capped at $10,000 since 2018. With property taxes rising in many places, that cap really bites, especially for homeowners in higher tax states. And it creates that weird marriage penalty, too.
Yeah, where two single people might get a bigger deduction than a married couple. And that cap is set to expire end of 2025, so expect more debate on that soon.
Definitely. And there's that other, frankly, quite disturbing issue, home equity theft.
Oh, yeah, it's awful. In some states, local governments can seize a home for unpaid property taxes. Okay, that part might seem standard, but then they keep the entire proceeds from the sale, even if the home's value is way, way more than the taxes owed.
So they keep all the equity the homeowner built up.
Exactly. It disproportionately hits vulnerable people, often elderly folks on fixed incomes who might just fall behind temporarily. It's a real injustice where it happens.
Yeah. Okay, wow. We've covered a lot of ground here. We've really dug into this federal capital gains tax on home sales, where it started, why it feels so outdated now, and these intense debates about changing it.
Yeah, we've seen how these fixed limits create that stay put penalty, hitting seniors hard, potentially worsening the housing inventory crunch. And we've looked at the proposed fixes, like total elimination or just indexing, and the strong arguments on both sides.
So the big question we leave you with is, what does all this mean for you? Thinking about these possible changes, elimination, indexing, keeping things as they are, how might that impact the housing market you're in or your own plans? Especially if you're thinking about selling or maybe downsizing or even trying to buy your first place.
It really prompts some thinking, doesn't it? Is this tax, as it stands, truly an unfair burden that's locking up equity and making the housing shortage worse?
Or, on the flip side, is getting rid of it mainly a benefit for the wealthy? Something that could cost the government needed revenue and maybe even make housing less affordable in the long run? These are big questions with real consequences.
Definitely something to mull over. How these policy choices around our homes, around property ownership, really do continue to shape, well, the American dream itself.